All right, everybody, it's me, Gregory Mannarino. It is Tuesday, August 17th, 2021. Well, let's start off this lovely day with yet another round of, it doesn't stop, abysmal economic news. So retail sales are cratering, despite the fact that today household debt here in the United States, personal debt, credit card debt is surging. Again, new record highs with regard to that as well. People are borrowing beyond their eyeballs just to make ends meet, just to survive. And retail sales are, again, cratering, absolutely cratering. And it plays right into what we found out yesterday with regard to factory activity falling off of a cliff, manufacturing. It's an insane thing. You see, what you're not supposed to know, and I'm going to cover this again real quick. The U.S. debt to GDP ratio is a hyper bubble as well. So if you look at GDP and debt here, the U.S. economy is contracting very, very rapidly. So what else would you expect? More bad economic news. The flattening yield curve, something I've been addressing as of late, is a big sign that our economy, and this is not just a phenomenon here in the United States. This is a global phenomenon. It's over. It's absolutely over. Now, again, yesterday, let's just put that into perspective. On the back of the bad economic news, again, we hit new record highs in this market. Now, will the same thing happen today? I don't really know, I'll be honest with you. Stock futures right now are lower across the board. There's a little bit of a safety trade going on here. What do I mean by that? You got some cash making its way into the debt market, some cash making its way into the dollar. How you can see this, 10-year yield came down a little bit. That means cash is making its way into the debt market. It's got to come from somewhere. So stock futures are lower. We'll see how that plays out. The dollar, knee-jerk higher. You always get this. Again, the market needs to digest this another round of terrible economic news. And once it realizes, hey, this means the Fed's going to keep buying assets, moving goalposts, it'll turn around. And who knows? Who knows? Maybe we'll see a repeat performance of yesterday. Because yesterday, pre-market, trading doesn't start for about 30 minutes, 35 minutes here. Futures were lowered as well, and we still managed to squeeze out a new record high. There's no connection at all between the stock market and the economy. The economy is in free fall. There's no end in sight here. This is by design, period, the end. I think we all know that, and you could expect more of this here. We will not get any good economic news whatsoever for the foreseeable future. We can't in this environment. You're not allowed to know, again, that our economy is crashing. And the illusion is if the stock market is hitting record highs, well, then we must be doing okay. Nothing could be further from the truth. There's no connection here anymore at all whatsoever. Anyway, I think you all know that. So let's cover a few more assets. I already told you about the 10-year yield. You got a little bit of a safety trade going on here. Fear trade, if you want to call it that, with cash making its way into the debt market, into the dollar. So this morning, like I said, it's not a great setup for the market, especially because crude oil is slightly lower as well. You know how this works. For the market to make meaningful gains, you need a stable 10-year yield. It's coming down a little bit. That's, again, the fear trade, so that's not great. The stronger dollar this morning, that's not great. Crude oil lower, that's not great. We do have one element of the four that we need, and that is the Federal Reserve's balance sheet hyperballooning. Not going to stop, but we need four things, all four, to work together really to see meaningful gains in this market. But like I said, with the bad economic news yet again today, let's see what happens. Maybe the market will get all giddy, realizing the Fed will not be tapering or stopping asset purchases. And, for as far as I can see, there's still all this talk this morning. I'm laughing. I'm sitting here watching, I think it was Bloomberg, and they're talking about, oh yeah, there's a strong possibility the Fed's going to taper in September. How about no? Absolutely not. These people, I can't understand them. Do they really believe this stuff? Or are they just following the narrative they're being told to follow? Nothing is what it seems, people. You know that. Anyway, gold and silver right now slightly higher. Cryptocurrencies catching a bit as well. So look, the game is what it is. And you and me, we remain in all the right spots with regard to this market. Capitalizing on the fakery, the propaganda that's going to keep pushing the market higher. Are we going to get a pullback? We did have JP Morgan and Citigroup warning. And Citigroup warned twice about the market about to take a hit or something. And what happens? Record high, record high, record high. I don't know what kind of dog shit that they're trying to force feed you or fist feed you. I really don't. But you know what to look at. Again, as I always cover for you, as long as the 10-year yield stays stable or remains in a range, the market ain't going nowhere. Could we possibly get a correction? I don't know. We don't get corrections anymore. The market just goes up, 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 up. And every single dip, let's say the market, falls 500, 600, 700 points. The next day or two, it gets bought right back up. So we don't have a normal functioning market. We all know that. We've been capitalizing on every single dip that's been coming along, and not just in the stock market. I've been explaining to you all, buy the dips in crypto, buy the fakery in the metals space here. We know who's doing it. It's JP Morgan. They've been dumping derivatives, silver and gold paper onto the market, at a feverish pace here, trying to keep the prices suppressed. But that's a gift. It's a gift to you and me. We know that. We are, again, becoming our own central banks if you're not already. That means hoarding hard assets, more specifically physical silver. In my opinion, do your own research. It's the most undervalued asset on the face of the freaking earth. I always tell you, look at the Dow gold ratio, gold silver ratio, and you will see what I'm talking about here. A market in a hyper bubble with regard to the stock market on the back of a debt Frankenstein bubble. I mean, that's where we're at. That's where we're at. But again, look, like I always tell you, it's opportunity. It's opportunity for us, at least from a financial standpoint, to stay ahead of the curve. All right? The nonsense, the lies, the distractions are going to continue. Okay? The look here's, the don't look here's, the mechanisms of control are going to get much more intense moving forward. So just expect the unexpected, really, is what you need to do. The most wildest things that you can possibly imagine are going to be thrown at you, again, to keep you in some kind of a distorted reality. But the fact of the matter is, you're here and you're listening to this stuff, and I think you get it. In fact, I know you do. Anyway, all right, people, look, kind of a long video. I like to keep these morning videos short. Please share this video, get it out there, and thank you for all the feedback from the video I did yesterday. It was overwhelming. I did read all the comments like I promised, and it was epic, epic. All right, love you a lot. Please share the video. See you at the end of the day.